Good morning all. I am Dr. Ibha. In this video, I am going to talk about asset allocation, its meaning, benefits, and steps involved in asset allocation strategy. Asset allocation, it is an investment strategy in which individuals or investors divide their investment portfolio between different diverse asset classes to minimize investment risk. Here, investor has to diversify their assets in different asset class. That different asset class, it can be equity, it can be debt funds, it can be gold, it can be real estate. There are different investment avenues or channels are available where an investor can invest. The main aim or objective of asset allocation is to make a balance between risk and return. And it should be based on the risk appetite of the investors, the investment tenure, and the financial goals. In simple terms, it is a process of asset allocation is the process of investing across different diversified asset classes. The two major key aspects of asset allocation is it is a process and it is made across different diversified asset classes. When we are talking about the diversified, it refers to those investment avenues which are not correlated in terms of performance. Correlation is talking about what will be if one variable is increasing, how it will impact to other investment class, that is known as correlation. Here, for examples, here in the year from 2000 to 2020, I have taken the performance of Nifty and the performance of gold fund. So in the year 2000, you can see Nifty has given the return of minus 12.3% and gold has given the positive returns. So here these are the negatively correlated. Nifty is decreasing, the return is in decreasing, but the gold is in positive. So here diversified asset class means the two investment avenues should be negatively correlated. Why it should be negatively? So that you can compensate your return. If Nifty is decreasing and gold is increasing, means your return will be stabilized. That's why we should look into the correlated, negatively correlated investment avenues when you are investing in different asset class. Now, why it is important to learn the asset allocation? There are certain benefits are there. The first is benefits of asset allocation is to reduce the risk. We have looked into that negatively correlated investment avenues. You can diversify it, you can reduce the risk. Second is the return will be consistent and it's most. That's why this strategy investors are adopting to minimize the risk and to maximize the return. And it is focused more on the long-term goals. There are certain steps are there. Based on that, you can diversify your assets. The first one is, as an investor, the first step is to understand different asset class, then risk tolerance level, define your financial goals, and building a portfolio. Understand, the first one is to understand different asset class. Here, there are different asset class are there where an investor can invest. It can be equity funds. Under the equity funds, it will be shares, it will be mutual fund. Under the debt funds, it will be the bond, debentures, or other debt funds included under the debt funds. Cash or cash equivalent is talking about your saving accounts. Certain amount have liquid assets an investor has to keep so that they can utilize it if they require in some situation. So the first step under the asset allocation is to understand different asset class. Second is risk tolerance level. Based on the investors' risk-taking capabilities, investors has been categorized under three major investor group. First is aggressive, moderate, and conservative. When it is aggressive, investors are maybe young and unmarried who are having the maximum risk taking capabilities. They are considered as aggressive investors, so that if investors coming under the category of the aggressive, they can invest their investment, mostly 60 to 80% of their investment should be invested in the equity funds. And if it is conservative, opposite to that, conservative investors are known as risk averse investors. The investors who doesn't want to take any risk for their investment, they are considered as risk averse or conservative investors. And third is moderate investor. Moderate investor means neutral. Maybe 40 to 60% of investment will go in risky asset class. Other than that, it will go in safe investment avenues. Third step is define your financial goal. Based on the financial goal only we can invest, because the financial goal may be short term, maybe our financial goal can be long term goal. So short term goal means you should invest in the short term investment avenues, minimum 1 to 3 years maybe. Long term investment avenues maybe more than 5 years. And last will be the building a portfolio. First, as an investor, you should understand the different asset class where you can invest, your risk taking capabilities, and your financial goals should be defined. And based on all these factors, we can build our portfolio. So portfolio is the combination of all investment channels or avenues. So here, if you are coming under the aggressive investor, 60 to 80% will go to the share market. If it is conservative, it will be 0 to 20% of investment should go in the share market. If it is moderate, it is 40 to 60%. So these are the asset allocation strategy. I hope you understand this asset allocation strategy, and so keep investing and happy.